In this video, we're going to talk about Progenity, trading under the ticker symbol PROG. Before today's video begins, if you would like to see more stock analysis videos, please like, comment, and subscribe to my channel for more. Progenity has been the center of a lot of heated speculations lately, with its stock price expected to be shorted massively before the momentum began to reverse and to fade afterwards. With that being said, I think that an important part of this trade has to do with some speculations of buyout at $4 per share. Essentially, a company called Ethereum has been shorting Progenity and also plans to offer it to a bigger company at $4 a share. This would make the buyout more tolerable for people who currently own Progenity stocks, since they would perceive this as a good way to exit a position they would otherwise be stuck with. Overall, the stock has been trading around $1.50 over the past few days and has an immense pressure to go lower. Actually, its after-hours trading data suggests that it is currently trading at $1.32 by now. This is a rather surprising move, especially considering that the stock has been having a relatively healthy trading volume over the past few days. I mean, granted, it's not the 200 million shares that we've seen before, but it's still quite compelling. What this means is that this stock is now getting watched after by institutions, and there is likely a plan to buy out the company at some point. This is not something above the surface yet, so I would say that there can be potentially a good opportunity to make some quick profits if you get in Progenity sufficiently cheap. The alternative scenario is that the merger doesn't happen, in which case all bets are off. The stock may be able to go even higher, but that really depends on if retail investors would be able to dig in at the right moment. I mean, keep in mind that the float of this company is very thin, so any sort of significant increase in volume may be enough to force the short sellers to recover their short positions, because their borrowing costs would increase in time as long as there is no massive sell-off. My recommendation for Prog is to keep your position for now and to look for possible price action hints over the next few days before making a decision. If your risk profile allows you to tolerate the risk, I would actually say you can afford to wait a few months to see if the merger takes place. For those who don't have a position in Progenity, I believe that now is a good moment to own some shares in order to at least have a foot in the door for up to 1% of your portfolio. Looking at the current stock environment, I think that we have to be careful about buying more equities. The market has been predicted to eventually go through a major pullback or even a recession for more than a decade, after the QE years and a drastic increase in asset price and the corresponding decrease in their yields. We have to remember that the market isn't a mirror on how the economy is doing, because otherwise Venezuelan economy would be doing great, right? Well, no, it's not. It's mostly a reflection of how a hidden inflation is going on outside of the real economy. That is for North America and the Northern Hemisphere in general. For South America, well, it's both in the financial market and in the real economy. So all that is to say that and also 2020 saw a big push in asset prices as well. And this time, not just for the blue chips, but also for the growth stocks. Although the QE money is fading away, this phenomenon is now partially compensated by the fact that there are a lot of geopolitical tensions around the world, and because of it, capital around the world choose to convert their money into US dollars and to flee to safe haven. And the more tensions there are, the more we're going to see this kind of phenomenon. Because if you have money, money can go anywhere in the world, unless there is capital control, in which case there will be even more money fleeing that region or that jurisdiction. Well, you would choose to go to somewhere where your money is safe. This is why German bonds, like the German government bonds, have negative interests sometimes. is because people would rather lose 1% over a year instead of, say, 50. And also, given the major movements that are currently going on in Asia or in like other class assets, as well as the announcements from the US Federal Reserve officers, I would say that we should be expecting some sort of pullback from the market in the future. This is why I would say that if you're currently cash heavy, maybe consider to stay cash heavy for a slightly longer period. Because I think that other than, of course, buying enough shares to have a foot in the door, you can afford to have more than a foot in the door for cheaper later on. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.